Hey everyone, I hope you guys are doing well. Today we're looking into Corsair Gaming. We're going to see if it's actually attractive right now after being crushed in two recently in 2021. The stock went from about $46 to $22.50 today. So let's jump right into it. If we go into financials, what I like to see first is how is the revenue doing, and we can see that the revenue peaked in 2020, and then for the next 3 quarters. It's been decreasing pretty consistently, and then in the last quarter, that earnings that they just reported, it's been going up again. So what I want to know first is what is explaining this whole downtrend here in revenue, and what is explaining the jump back in the revenue. All right, so this is the latest earnings report of Corsair, and here it says that net revenue growth of 8.1% in 2021 despite the lack of availability in the retail channel of reasonably priced GPUs, which caused many enthusiasts to hold off building a performance gaming PC. And then it says, we believe that a reasonably priced GPUs become more available, there should be pent-up demand for building high-performance gaming PCs. So basically what they're saying is that because the prices of GPUs were so high, a lot of PC builders basically stopped, and they just we're probably waiting for the prices to go down before continuing to build their PC. And they're saying that this is one of the major impacts of the growth in the few quarters that we saw. Alright, so we saw why the revenue decreased in the past quarters. Now let's see why the revenue actually jumped in the last earnings, right? So if we go here, we can see that Corsair introduced new products. One of the big ones is this new technology, DDR5 memory, which is the biggest upgrade in performance memory in 7 years. The next one here, we have new category, Corsair Collections. Basically, it's keyboards and customizable equipments for the users. And another one here, which is new controller, PlayStation 5 controller. Now, are these new products going to be able to sustain these growth that we're seeing? That's what I'm going to show you right now. Alright, so this is Corsair's financial outlook for 2022. So here in red, these are the outlooks that the company has for each of these segments. So first, for the revenue, we can see that they're expecting $1.9 to $2.10 billion in revenue for 2022. So here, if I take the highest end of their assumptions, so $2.10 billion, this would only result in a 10.3% growth in revenue for 2022. This is not a lot, considering that I'm taking the highest number of their expectations of their forecast. Same thing here for adjusted operating income. They are expecting between 195 million to 215 million. And once again, if I take the 215 million, which is the best scenario of their forecast, this would give us a 10.53% growth of the adjusted operating income for 2022. Adjusted EBITDA is the same. If I take the higher end, this would only result in 9.8% growth for 2022. So this is really slow growth, especially considering that I'm taking the best scenario results for the 2022. So this could be well lower than these numbers. So yeah, this is slow growth, even with the release of the new products that we just saw. Alright, now if we look at the few insights that we have here, first, in the profitability, we can see that free cash flow margin is bad. Free cash flow as a percentage of earning is really bad. The gross margin, 27% is average. Operating margin is average. Net margin is average. For the growth, the free cash flow is decreasing, very bad. Free cash flow per share decreasing, very bad once again. We can see that the book value is increasing, which is very good. Tangible book value is increasing as well. That's very good. Here, the earnings per share are decreasing. That's bad. The revenue is increasing by 11.85%. That's good. But like we just saw earlier, the outlook for the revenue is increasing. It doesn't look like it's going to be increasing by more than around 10% like we saw earlier. The next income, the net income, is decreasing, which is bad again. Here, what I want to show is the current ratio is it's average. But here, the goodwill and intangible asset as a percentage of total asset is bad. And basically, goodwill and intangible assets, they're not physical assets. And the fact that this is representing 40.58% of the total assets, so basically almost half of the assets the company has, it's not very good. It's not very good to see. The shares increasing, that's average. Now for the returns, the return on invested capital it's good. Return on equity is good again, but return on assets not the best. The company could be more productive with their assets to generate more sales. Alright guys, so here we are in the cash flow statement. What I want to point out here is the stock-based compensation, and here we can see that from 2020 to 2021 it basically tripled. And if you look at the amount that the company made in operating cash flow in 2021, it's only 20 million. And for this amount of operating income that the company generated, the stock-based compensation represents here 86%. That is a lot. And we all know that stock-based compensation is going to dilute the shares, obviously. I know it's not a cash outflow, but this is still like significantly high compared to the operating cash flow that the company is generating. So this is kind of a red flag for me, a bit of a huge increase from 2020 to 2021. All right, so to conclude our analysis, the first point we want to show was that there is a slow growth projected. And as we saw, the management team's earnings estimates, here what I did as a reminder, I took the best possible scenario from their earnings estimates. And basically for 2022, these are the growth projected in revenue and in profitability, which is really not a lot year over year. Okay, so slow growth, the low margins of profitability as we saw earlier, and here the financial health is average. And as a reminder here, there is a lot of goodwill and intangible assets. So one thing to keep in mind. Alright guys, so after the stock being broken in two, the current stock price is $21.89. This brings us to a current PE of 22, which is more reasonable than the previous prices that we've seen around $35 and $40. I think this new PE does reflect the prospective growth of Corsair, just like we saw here, being a very slow growth company. I mean, just as I remember, I just want to put the emphasis that these results here for the estimate for 2022 are just the best scenarios possible. So this could very well be lower than these growth rates here. And taking that into consideration, I still think that the valuation right now is still, for me personally, still overvalued. So that was it for Corsair, guys. If you enjoyed this content, please subscribe. It really means a lot. And I'll see you on the next episode. Thank you.